right, let's see if this works. It does work. Ta-ta-ta. So, is there sound? Let's see. Okay. It's still flipped. Okay, it's flipped. It's flipped. Flip horizontal. There. And I need to move. Uh-oh. Okay, bear with me. This is the first time I'm doing this. All right, so I want to do this and check out these guys. Try shortcut. Um, so try shortcut. So try shortcut started off as Altera. With, I think, a bunch of people from MIT or Harvard. I'm going to forget. Anyway, I met one of the co-founders, Nico. Nico's the guy in the videos. I think you guys have seen the videos. Uh, Try Shortcut is an Excel killer. Um, they are trying to solve agentic AI for um, Excel. And so one of the, Excel is basically where everyone makes money, right? Spreadsheets are where everyone makes money. It's where we see our revenues. It's where you see shipments. It's where all the numbers are. Typically, LLMs have been horrible at numeric data. They've been horrible at tabular data. Neural nets in general have not been good. As our good friend Fortune would say, XGBoost is all you need. So typically they haven't been good. So anyway, we have a lot of numeric data in the world. I'm going to try and do something that I used to do pretty often before, which is I want to create um, a valuation model for a copper mine, copper mine in Alaska, um, and go. And let's see. So we're off to the races. It's thinking the user wants to create a valuation model for a copper mine in Alaska. Since the spreadsheet is currently empty, let me ask you some clarifying questions to understand what you need. Very good. It the questions first. Very smart. Pushing it back onto me rather than going wild. For a copper mine valuation, there are several key components. I should ask what valuation methodology to use, DCF, NPV, what specific inputs they have or need, how to organize the model across sheets, what outputs and visualizations they want, and specific formatting requirements. Since it's a new task and the requirements are quite vague, I need to use the clarify with user tool. So they have clarify with user tool. That's nice. To get more details before building the model. All right. Can you help clarify what valuation model methodology would you like to use? Let us choose both DCF and comparables. This is interesting. It's given me a multiple choice question, which is nice because a lot of times agents will go wild on you and they will just head to places that they shouldn't head to. It's narrowed things down to pretty commonly accepted evaluation methodologies. How would you like to organize the model across different sheets, multiple sheets, Inputs, production model, revenue and cost, cash flow evaluation, or simple structure. Let's do more complex structure. Um, what key outputs and visualizations would you like to include? NPV, IRR, payback periods, sensitivity tables, and charts showing cash flow over time. Just NPV and basic financial metrics. Now let's go for the whole shebang. Um, do you have specific data for this copper mine, or would you like to meet industry standard assumptions? I actually wish I had a specific, um, data. I'm just going to use industry standard assumptions for an Alaska copper mine. Please let me know if you have any specific requirements for mine life and production capacity, copper price assumptions on forecasts, operating and capital cost structure, tax rates and royalties specific to Alaska, environmental closure costs, any specific risk factors or scenario to model. This is good. This is good. It's really kind of asked me for questions that I would probably ask a external party for, or I would do research on. So I wonder if I can get something from. So I've done some previous work on copper, um, and because for obvious reasons I got into a Twitter kerfuffle uh, with someone, and so I had to do some work on copper. Let's see if I have that ready. Physical constraints of growth. All right. Um, um, all right. Let's use um, let's use let's use assumptions for the Pebble Pebble mine in Alaska for pricing. Use have three scenarios, one base case, current prices, one um, stress case, prices are prices down 30%, and one high case, prices up 30%. All right. So the Bristol Bay, the Pebble mine in Alaska, in Bristol Bay, has been blocked for many, many years. And I think it's almost been 30 years the mine has been blocked. So let's see if it do that. Input parameters section, mine reserves. Okay, production schedule. Okay, so it's defining where it's going to put all the details. That's interesting. And it's basically telling me I can change it. I don't really know what it's going to do. So I'm just going to say, um, it's preparing to execute the task. I wonder if it's going to go and do web searches now. All right, it says perfect. I'll create a comprehensive valuation model for a copper mine in Alaska using the Pebble mine assumptions as a benchmark. Structuring across 6 sheets, as you specified, using both DCF and comparables methodology. Let me start by creating the model structure and inputs, creating the 6-sheet structure, and setting up the inputs with the Alaska copper mine assumptions. Now, can I see this? Oh, yes, I can see the task pending. So I think the tryshortcut guys are doing multiple agents working together. So I suspect they have a coordination agent in the middle, and they have a bunch of agents as well. They're creating input sheets with mine reserves, production rates, costs, and copper price scenarios, base, stress, and high. All right, so current copper price, 385 a pound, and I would I have to check this because you cannot allow the model to get away with you know what is the current price. Price 583. Come on, copper futures. What's the price of 1 pound of copper? Mm, mhm, um, let's see. Copper price seems to be about 580 per pound. Why did it use 385? I do not know. Copper futures climbed above 590 per pound, reaching all-time highs as global risk appetite strengthened amid progress in U.S. trade negotiations. So one of the reasons I believe that we are going to have some problems with AI is copper only increases, production of copper increases by about 1.3% a year, and the build out of electricity which is required is massive. Every solar panel needs some copper. Every transmission line. It's pretty significant. The numbers are, I think, like something like 1 pound or a few pounds of copper per ton per solar panel installation. Copper is also used for batteries. Every battery uses copper. Copper is used for transformers, the physical kind. It's used for motors. It's used for generators. Used everywhere that we want to use electricity, primarily because it's a great conductor, which is also fairly cheap. There are better conductors. I think gold is one of them, but gold is not cheap, and copper is. And so typically what happens is copper prices increase with economic growth. Maybe that's a 20th century artifact because economic growth followed very closely electrification. Um, and let's just see. So I feel like the model started off with getting the price wrong, which is annoying. So it's a building. So it says, okay, create an input sheet. So you create an input sheet. Um, okay. So one of the problems is I cannot check the model because while the model is writing, I think the model flips around. So the agent is writing in front of us. Um, Pebble mine, Alaska, mine characteristic 580 million tons. All right. I'm going to check that also. This is annoying because I have to check now that I don't trust the agent because it got the pricing wrong. I have to check everything, which is like super annoying. Now I have to check every single detail. All right, so Pebble Mine reserves. All right, Pebble Mine reserves, Northern Dynasty. Um, I'm going to use Claude for this. Um, Claude. All right, Claude. Let's see. New chat. Claude. Okay, what are the reserves for Pebble Mine in Alaska? All right, there. Off you go, Claude. All right, so it's create input sheet, built a production model, create revenue and cost sheet, develop cash flow, projecting free cash flows for each price scenario, build valuation summary. All right, let's look at Pebble Mine, Alaska. Um, okay, how much copper in millions of MT? All right. Okay. Measured, indicated, inferred. Hmm. All right. So Pebble Mine um, only has 37 million tons maximum. Uh, what is the cost per overburden? All right. So uh, the model has gotten a bunch of stuff wrong. I don't know whether to evaluate um, based on just the formulas or whether I should evaluate based on the inputs as well. I'm going to take the view that I should evaluate based on the input as well. And so, uh, it should have the agent should have checked the right price. It's available on the web. They did not check the right price, so they got me the wrong price for the copper. Current copper prices are 5.9. So we got the prices for copper to start off with, and then it went downhill from there. Initial capital investment 4.5 billion. Um, okay, not bad. All right. Operating costs. All right. Operating costs. All right. Review changes alpha. Okay. Okay. Let me fix this. Okay. All right. I'm going to review this now. Let me just read through what the agent said. It created each sheet by sheet. It said, I see that NPVs are negative due to high operating costs. Let me fix the operating cost calculation and then create the sensitivity and showing cash flows over time for each scenario. I created a comprehensive mine valuation structure input feed. Mine reserves 580 million metric tons of copper grade 0.41% and 20-year mine life. Operating cost $4 a ton. Initial capital costs. Production model. All right, let's review this one by one. Input sheet. All right, let's look at the input sheet. So, given me an input 580 million tons of ore reserves at a copper grade of 0.41%. So it is supposed to be copper grade of 0.41%, not 41%. Uh, Recovery rate 8,500%. Mine life 20 years. Average annual production capacity 20 million tons. All right. Initial capital investment 4.5 billion. Operating cost 50, 1250. Copper price scenario is 385. Base case. This is not a standard way of putting together a mine. I do not know why the discount rate is 1,000%, 700% federal tax. Because everything looks incorrect, I'm going to have to check what the model actually did with it. So let's see. Year one, ore mined, copper grade, copper content, 59.5 kilotons. Ore mined, 14.5, 59.5 kilotons. That's a lot. Your recovery, 85%. Copper produced 50.5 kilotons. That's a lot. Cumulative production, 14.5. Operating cost. All right. Goes on. Total ore mine, 558. Average grade, 40 point. Total copper produced kilotons. I have to check this by calculator. It's hilarious that I have to check this by calculator. All right, 558. 558 times 0.4, 223. 223. All right, let's see the formulas. All right, B26 is 558. So coming in from B26, B26. All right, okay. All right, average grade, 40.2%. All right. Total copper produced 1.9. Total copper mined, life from mine operating cost, revenue and costs. Um, all right. Let's look at this. He thinks it's going to produce 111 million pounds of copper in year one at 385. The first problem is that this number is too small. Let us go back and let's tell the model the current price of copper is 590 per pound per pound. All right. Okay, so it's going to update the model. Let's see what it does. Let's see, it updates the model. It's interesting because the try shortcut guys have actually built a full new Excel, and it's working in browser. I guess it's like a Google Sheets. Um, they did a bunch of front end work, which is rare for AI developers. AI developers rarely want to do front end work. Excellent. I've updated the model with the current copper price of 590 a pound. This has dramatically improved the operating metrics. All right, let's look at the inputs. Inputs, 590, 413. It's compacting context. Okay, so they are they are you know they are managing the context window. Um, 4 cells. Okay, one of the all right. Evaluation sheet, production model, cash flow, visualizations, current price, updated. Excellent. Key inputs of the 590 copper. Okay, so it changes things and then it tells you what the results were. So the base case improved from minus 3.9 to minus 1.5. Stress case, minus 30%, still negative. High case, plus 30%. Now positive at 532 million. Wow, we're actually making money. Base case improved from minus 12.4, high case to 11. Exceeds the 10% hurdle rate. Wow. Total revenue is 60.2 billion to 24.8 billion. EBITDA margin 17.6. Project approaches break even at current prices. Project is now marginally viable at current copper prices. With copper prices at 590 per ton, the base case IRR is positive, etc. Additional value drivers, gold, molybdenum, operating cost reductions, capital cost optimization. Uh, I still don't like this 41%. It's 0.41%. This would feed through to here, the grade. Let's see. All right, so this is cell inputs on a B8 multiplied by 1 minus 0. All right. Okay. All right. So, and B5 ore mined, 14.5 million tons multiplied by 41, 14.5 million tons. So it decided to take 14.5 million tons, and then it decided, how did it get to 59.5? It decided to multiply by 41%, 0.41, and 59.5, and then it decided to multiply that by 10 to get the kilotons. This is tons. It would need to, this is millions of tons. So we got 5.9 million tons, and you should divide by 1,000 to get the kilotons, uh, which would be 5945. And then you should divide by another 100. Oh my gosh. Okay, so it fixed things on its own. The formulas are wrong, and it just kind of fixed things on its own. So 14.5 million tons at a copper grade of 41%. And then it just kind of randomly kind of jammed the numbers together to get the 59.5. It should really have been 14.5 multiplied by 0.41 divided by 100, and then divided again by 1,000. But the formulas are wrong. But it got the right answer, but the formulas are wrong, which is equivalent to having a wrong answer anyway. All right. Then it went to the recovery. It decided to get 85% recovery. I don't know what the average recovery would be. We would have to check. Copper produced 3.5, and then the operating cost decided it was going to be 24 bucks a ton. What are operating costs? So the 2023 PEA shows operating costs 1098. Why did it use operating costs of 24 bucks? Um, all right, let's give it the operating cost of um, 12 bucks. Let's give it an operating cost. Let's do operating cost of $12. $12 in. Uh, all right, it didn't have a strip ratio, which is annoying. Um, all right, what is the? So the thing about a mine, an open pit mine, is, and it's dirt, right? If you have a bunch of dirt and you have 0.41% of it, which is copper, um, it's basically mostly dirt and water, right? And you have to dig it up. And the funny thing is, there's a layer of dirt which has no copper above it. So that's the overburden. And you need to figure out how much overburden you need to remove for 1 ton of this ore. And that's called the strip ratio. So you can have a strip ratio of 5:1. That means you take away 5 cubic meters of dirt to one, ore ton. The strip ratio for this mine is 0.12, but there's no real operating cost assumptions here of um, the actual strip ratio. So you wouldn't be able to see that. You know, it gave me a generic business model with some generic inputs, but if you want to analyze something, you need to you analyze a business based on its metrics within the within the area that it is, right? If it's going to be SaaS, you need to know the ARR, you need to know the LTV, you need to know the CAC. Um, if you have a mining company, you need a bunch of other things. You need to know the strip ratio. You need to break down the expenses a little bit more. And I feel like it didn't do a great job of this. Um, and I'm gonna treat this like it's a junior analyst. Okay, I'm gonna say, look, um, let's do operating costs of $12. Let's not do that. Let's really go into this a little bit more. So we have um, let's start off with the total amount um, of ore. 580 is not bad. Um, okay, so the resources. Okay, So let's see. All right, let's do resources. Okay, the resources. The resources are inferred, measured, and indicated. The resources are 6.5 billion metric tons uh, of ore, of copper ore at 0.40% grade. You have used 41%, 41%, which is incorrect. All right, let's send it off. Um, so you get to see this thing go. The user is correcting me. They're saying that the copper grade, um, the user is correcting me. They're saying the copper grade should be 0.40%, not 0.41% as I used. And the total ore reserve should be 6.5 billion tons, 6,500 million tons, not 580 million tons. This is a massive increase in the resource size, more than 10 times larger. This will significantly impact the project economics. I need to, number one, update the total ore reserves from 580 metric tons to 6,500 um, metric tons, million metric tons. Update the copper grade from 0.41% to 0.40%. Okay, so it really doesn't recognize its mistake um, that it's got a 40% here. I am confused right now. All right. So now it's decided, let me check to see whether we need to adjust the production schedule in the production model sheet since we've extended the mine life to 40 years. So it's doing a bunch of stuff now and it's compacting context again. All right. This is interesting. I don't know to what extent, I don't know how they're doing this, right? I don't know how they're feeding in the numbers into the context window. Um, how would I do it? Perhaps organize the spreadsheet into logical blocks of data that it contains and um, places where it links up the income statement to the cash flow statement and feed those links in and then have the agent kind of go in and check and have another agent kind of check consistencies and that numbers sum up correctly, etc. One reviewer, so one kind of master allocator, one reviewer for the numbers. I don't know, a bunch of agents. I see there are circular references. Let me fix these issues. This is so exciting. This is you get to watch the agent struggle like you would a analyst. So this is fun. Uh, but it's kind of fun to watch. Watch it struggle. Let me. Will it figure out the circular references? This is a tough one. Let's see. Let's see if it figures that out, or it just crashes. It'd be hilarious if it just crashes. I better save this. Wait. Copper mine. Uh, copper mine. Fixing the corrupted data and properly calculating the 40-year-old model. Excellent. Is it saved? I hope it's saved. It better be saved. I better export this file just once. All right. I need to fix the data corruption issues that occurred. Let me rebuild the spreadsheet calculation properly. Great. The model is now working properly. Let me create a final summary of the corrected results. Uh, One of the things about AI models is how truthful they are. Uh, if you gave this feedback to a human analyst, you know, a young freshman out of just out of college, you would see them get crushed. Their weekend would be gone while they check the numbers. Um, so maybe we can not torture analysts, going forward. Maybe the future is, we can torture the models instead. All right, 119 cells have been edited. Use Max to see detailed cell calculations. All right, what did it do? So every time it finishes a bunch of calculations, it tells you what corrections it made. The resources updated to 6.5 million tons. Copper price already 590 per pound. Mine extended. So I really just dislike this. Um, I really just dislike this 40% here. Is it a formatting issue? Let's look at format cells. It's formatted 40% with decimals in two places. That's a percentage. It should be 0.41%. So I'm going to ask it, can you tell me the value of the cell in inputs in inputs B? I'll check the value of cell B8 in the input sheet. Okay, so it doesn't have it in memory. So that's an interesting finding, right? It doesn't really have it in memory. It has it on the spreadsheet. So maybe it's using the spreadsheet as kind of a memory there. The value of cell of inputs B8 is 0.40 or 0.40%. Aha. Okay. So it is reading it at 0.4%. Okay, so now there's two data layers. I guess there is a presentation layer, which is the external layer, and there's an internal data model. In the internal data model, it's zero point 0.4. But the way Excel works is that, if you type in zero point 0.4 and you set percent, Excel would assume that's 40%. And Excel would automatically format it for you once you put in the percentage. So this is annoying. Um, let's see if I can ask it to change the formatting. Can you change the formatting of of all percentage cells to decimals? All right, let's see it. Let's see whether it can do that. If you can give me a zero point 0.4 there with no percent sign, I'm happy. So let's see. Let's see if it works. All right. What do we have? I'll change all percentage signs, percentage formatted cells to display as decimals instead of percentages. All right. All right. Let's look at the inputs page. That worked. All right. Now I'm relatively happy. Okay. Um, recovery rate. 85%. Oh my gosh. That's why it was showing 8,500%. Wow. How confusing was that, huh? Animal production capacity 50, resource utilization. 0 percentage of resource. All right. Initial capital 6.5 billion, sustaining capital, closure cost measurement. Mining cost per ton 850. All right. The mine has a strip ratio of 0.12 to 1. Please calculate costs using overburden removal amounts. Minus strip ratio 0.12 to 1. Please calculate costs using overburden removal amounts. Yeah. All right. Let's see if it gets that. This is a much more specific costing structure, and I don't know if the model is going to get it. I think Claude would get this. The Altera guys are not. The tryshortcut guys are not using a foundation model. I think, or maybe they are. I don't know. Maybe they're fine-tuning a model. I don't know. But let's see if it gets it. Use one screen. Claude would definitely get overburden. Strip ratio, calculate total material ore plus waste in the production model. Update the mining cost to reflect the cost of removing overburden. Typically, waste removal costs less per ton than ore mining. Let's update the model to include these costs. All right. It's going to update the model. So it doesn't have the build-out phase. Any new mine, you need to build a bunch of infrastructure because these things are in the middle of nowhere. So you need to start off with building a road, and when you start off building a road, you start off from one end, and it's a 100-kilometer road. You have to go 100 kilometers and build that road. You can't even build from two directions most of the time. So you need to build a road. You need to build infrastructure. You need to build power. You need to build a port. You need to build all of this stuff like a small city in the middle of nowhere. All of that, none of that is here, right? None of that is in the costing. Let's see. I see there's an issue with my cost updates. All right. While it works on those things, let's just look at the valuations itself. Let's look at the valuation summary. Base case is a very big number, or 18 billion minus 18 billion. All right. IRRs are 0, payback period 12 years. There's a bunch of corrupt calculations now. Comparables analysis. Oh, nice. So it did a comparables analysis, Freeport McMoran. I don't know where it got the data. I suspect it did a web search and found like a analyst report somewhere. Let's just check on whether these are current numbers. Finance.com, Freeport McMoran, US. Is the market cap correct? 64 billion. All right. It got the market cap correct. All right. So a little bit more reliable. Let's see. First Quantum was 15 billion. Let's see. First Quantum. First Quantum OTC markets. 19 billion Canadian dollars. 19 CAD in USD. Did we get a 14? So it got pretty accurate numbers. I don't know whether the EV per resource is correct. Let's see if our friend Claude can get it. Can you find me the EV per pound of copper resource for Freeport McMoran and give me the calculation. Um, implied valuation. So one of the things that it got wrong is that it included Northern Dynasty. Northern Dynasty is actually the Pebble Mine um, owner. And did you add that? Okay, it added the average. All right. So excluding the outliers. So it didn't add it to the average, but it wasn't very clear about that. I had to recheck it. And I should need to recheck it. I also don't like the fact that I can't tell what the inputs are and what the outputs are. Um, and it is off. It is off on like a long quest right now to rebuild the production model calculations with proper strip ratio implementation. Fixed revenue and cost sheet, correct copper pricing cost calculations. Rebuild cash flow projections with proper capital and operating costs. Fixed valuation summary, NPV, IRR, and metrics calculations, and verify sensitivity analysis calculations are working properly. It is on a long quest. I do not like the formatting of this model, and I want it to change, but I have to wait. So meanwhile, we have running. Let's see if, how Claude does on figuring out Freeport McMoran's numbers. Let me pull up Claude, a good friend. So Claude is off. Um, all right, so Claude ran down the numbers. Market cap 61 billion, debt 9.4, cash 4.39, enterprise value correct 66. Copper resources, FCX 97 billion copper, 0.68 per pound of copper. And is that correct? Is that correct? Let's see. Let's see. Let's see if we got right. Valuation summary. 0.65. Not bad. Not bad. I do not like the fact that it didn't include, Claude did it properly. So I want lots of things right now. I want the comparables analysis on a separate page, um, and I want the market cap, debt numbers, and the cash numbers summing up to the enterprise value. I want the resource numbers for the comparables and the calculation. So it's really not that useful for me that it pulled out market cap, because it pulled out market cap here, but then you're using enterprise value for resource. So what you really want is you want to be able to ensure other people that you're doing the right piece of work, and that is something that's skipped. It needs to show that it's doing the. It needs to actually convince other people, because the point of these financial models is that you're trying to convince someone about something. In order to convince them about something, you have to do the work. The model, I mean, not the model, but app, I guess, it didn't like it didn't show that the work was being done. It looks like the numbers were correct, but it didn't show that the work was being done. That's annoying. Um, I would like probably citations, maybe. You can put a little comment in the corner and have a citation on where you got the data from. And then when you need to print out, you can just not print the comments. It's verifying sensitivity analysis, compacting context. I have a feeling that I am really working this model right now, which should not be the case. Um, so what we have is a very buggy model, but I think you know, it's kind of there. So I'm gonna start off with I want you. I want all there's all raw data in raw data to be in um, blue, to be to be, I want, I want the text. I want the text, text of all raw data input numbers to be in blue, be in blue text, blue text, blue text. Let's see if that works. I see now why people use like whisper flow. I'm probably faster talking. All right. I'll help you format all raw data input numbers with blue text. Let me identify and format all the hard-coded input values across the model. So at least it understood what I meant, um, and it should go across and it should clean up everything. That's what I want to do. Clean up everything. Let's see. Let's see if it manages to do what it should be doing. Dun, dun, dun. It's checking the numbers. It's formatting the data. Dun, dun, dun. Okay. What do we have? What do we have here? All right. Perfect. I've successfully formatted all raw data input. All right. Let's check this now. Let's check all raw data inputs. Yes. Yes, that's good. That's good. Dun, dun, dun. Production model. All right. Revenue and costs. Revenue, operating cost, EBITDA. All right. Okay, so at least the inputs are in the right color now. Initial capital investment, 6.5 billion US dollars. Base case. Let's look at the valuation summary. It did not do it. It did not do it. It did not. I am so annoyed now. Can you check the valuation summary and other pages for hard-coded numbers and ensure that they are in blue. I kind of want to send off like multiple instructions because there's a lot of stuff that the model needs to change, and there's a lot of formatting that the model needs to do, but it can't do it right now. So I just have to wait. So I guess this is what work of the future is going to be like. It's going to be sending an agent off to do something, and then asynchronously coming back to it. I do not do asynchronous work very well because I kind of want to get things done, and I want to plow through and just nail it. And I really dislike models like going off async and coming back with mistakes. It really annoys me to no end. So I guess I have to learn. I have to learn how to like be zen about like coming back with mistakes. But it's just annoying. I totally get the finding that it slows coders down. I totally get it because you end up kind of giving the instruction and then kind of waiting around for it. All right, now it's checked. Let me check a few more areas and ensure completeness. So I guess it has to review numbers one by one. It feeds its own context window. Uh, they, yeah, perfect. I've completed a comprehensive check and formatting. It's interesting that they made an actual full web browser, full app on, you know, like a Google Sheets app. I guess my guess is that the the model has access to the underlying data model that Excel itself would use, meaning, even every cell here has a value, has a format, has a bunch of other metadata attached to it. Um, how many decimals, what color it is, and all of those pieces of metadata are available to the model. Because if not, it's not going to know that it's blue, right? So it is able to check, but it doesn't check all the time. That's my guess. It focuses more on the numbers, except if you ask for the formats, maybe. Payback period, sensitivity analysis. All right. For valuation summary, comparables, comparables, comparables. You should show market cap, debt, cash, EV, resources, and then EV per pound copper. And then EV per pound copper. I also wonder whether you could just kind of, you know, whether the model has access to the point and click, whether I can just say like, can you bold the selected section maybe? That would be interesting, right? The model, you can work visually with the model. Um, yeah, let's see if it can do that in a bit. All right. All right. Analyzing the proper formatting and also relocate project notes that were displaced. What project notes were displaced? DC evaluation, comparables analysis. Okay. Market cap. But it took out Freeport McMoran. Why? Why did you take out Freeport McMoran? I do not like. Why did you take out Freeport McMoran from the comps table? Will it answer the question or will it make a change? Let us see if it answers the question. You're right, I shouldn't have removed Freeport McMoran and other major copper producers. Let me add them back to the comparables table while maintaining the new structure with market cap, debt, cash, EV, resources, and EV per pound. Why did it do that? No one knows. No one knows. Man, Excel for models for agents is tough. I admire the shortcut guys for giving it a try. you know, there's so many numbers that you have, and I feel like, if you get one or two numbers wrong, the whole thing doesn't work. And you need to have some sense of what the numbers are there for too. And I don't think it does. I don't know. Is this too complicated a task? I do not think this is a very complicated task. I think this is a very standard financial model that um, you would run, and you can do this for any industry. I've done this for mining. You can do this for SaaS. You can do this for other industries too. But why did you know? All right, I'm gonna take a. All right, so it's added back Freeport McMoran. Let's let's see if it can do. Let's see if it can do a little bit of NPV sensitivity, tornado diagram, low impact, high impact, copper price. The copper price sensitivity analysis has not been updated. Um, that's annoying. So it didn't pull in the changes from inputs B28. Oh, nice. They actually, are we on inputs? We're on inputs and B. So they did actually use B28 is the G&A cost per ton copper, and it's used the G&A tons per price copper for. It's done a bunch of things wrong here. It's like, I don't even know why. All right, let's see. Sensitivity analysis. This is E10. E10. Why is it in blue if not hard coded? First question. Uh, what number is this supposed to be? Where should it come from? why does it refer to G and A costs in cell B28 of inputs? Let's see. Let's see. Exciting times. Let's see if it gets it. You've identified an error. The user is asking about cell E10 in the sensitivity analysis sheet. They're saying it's shown in blue, indicating hard-coded, but asking if it's actually hard-coded. They also mention it refers to G&A cost in cell B28 inputs. Let me check what's happening. You've identified an error. Let me investigate cell E10 in the sensitivity analysis sheet and check what it should be referencing. I found the issue. The copper price sensitivity table was incorrectly referencing cell B28 G&A cost per ton copper at 350. I see. I see. I see. I see. So I think what's happening is when the when the agent first builds out the Excel spreadsheet, it builds it out from the front to the back. Now, when it makes changes, those changes are not anchored. So, for example, or those changes are anchored, but they're anchored to the specific location rather than the object. So what's happening is, let's say you put the price of copper in you put the total reserves in this cell, right? And let's say after some, and that's going somewhere else. And after some formatting, and maybe you add something here, this total ore reserves ends up moving out here. And because it's end up moving out here, all the cells referencing this 6,500 should now be referencing this cell. So let's actually do it. Let's move this, Control X, Control V. So it allowed me to move it, right? So now this cell, which was referencing B7 before, is now referencing 6,500 percentage of total resource. Is now referencing G12. So the anchoring was done correctly, right? When you do it in Excel. But I think what happens is the model modifies the underlying data structure directly, and it doesn't capture the anchoring, I guess. So perhaps that's why the downstream changes do not get reflected. And it also, all of the it doesn't follow my formatting, which is annoying. All right, so let's give the model a little bit of a break. Okay, so inputs wise, it's okay. What I would like is each input to be cited. So for every, can you make a comment or note? Can we put in a note here? All right, insert. We can put in text box, bar lines, formulas, data, view, and settings. Can you make a comment? You can insert a comment. You can insert a comment. All right. Delete comment. All right. on the inputs page, on the inputs page for each hard code number, can you put in a comment on how that number was derived or assumed? Dun dun dun. Let's see. Let's see. Let's see if this works. Come on. Is it is it actually going to figure this one out? Adding comments to hard-coded values in other sheets, valuation summary comparables. So the user wants me to add comments to each hard-coded number in the input sheet, explaining how that number was derived or assumed. This is a good practice for documentation and transparency in financial models. Okay, so it was not able to use the Excel comment feature, I think. Um, I think. All right. I will insert a comment here. A A/B testing. All right. Inputs G6. Can you read the comment note attached to inputs G6 cell? All right. Let's see. Can it see? However, I don't see any cell G6 in the course summary provided. The used range shows A1 to D42. Aha. So we are starting to get into the weeds of this. What's happening is that the model has certain cells which have been identified as used, which are these cells, and other cells are identified as not used and therefore empty. And the model doesn't get to see immediately. I guess what they're doing is they're doing like hierarchically. So you have the model first look at the course range, and then from the course summary, it then goes into the fine detail. So what the agent is doing is that it's dividing all of these things, all of the Excel spreadsheet pieces into blocks first. So it has a block for inputs, it has a block for valuation, it has a block for sensitivity. And after having individual blocks for each of these, it is then going into those blocks, and it has certain inputs and outputs that those blocks have and certain things that those blocks must have. So it has an agent which does like kind of an organization of the spreadsheets and linking all of the bits of data or the pieces of data together. And that is like the course summarizer. And then there is a summarizer and the comment function is currently opaque to the agent. The agent cannot see the comments, the Excel style comments. So Excel style comments, if you add them, it doesn't show up to the agents in the summary, and it can't read them. Um, the cell G6 in input sheet is empty and outside the use range. You might be thinking of a different cell. All right, let's delete the comment. Okay. Um, standard flotation includes environmental, 24 bucks, truck and shovel, no grade control, January 2020. I would really like to have a more detailed discussion with the agent on the assumptions. And I kind of want like, URLs or places where I can check these numbers because I don't like assuming them. But hey, let's just assume them for now. Um, you have the production. It it didn't forecast a build out period. You probably need about 5 years to build the mine, to build the infrastructure. It didn't forecast that. You need another 5 years at the end to. So what happens with copper is that you mine the copper ore, and then you dump it, and then you basically process it after. So you could, finish mining, and you might have 2 years of copper ore to process, and it doesn't make sense to build a larger processing facility because that's super expensive. So instead, what people do is like they build a processing facility which they can kind of hit this kind of 80-85% utilization throughout the life of the mine, and they stock up ore over time. So it's not doing that. It decided not to do that. Revenue and costs. Okay. Um, I don't like. All right. So copper production, 187. Copper price, millions of pounds, 853. Operating cost 56. EBITDA 292. Copper price 319. Okay. I don't see why it's 455 because I told the model specifically it's $5. 590 in fact. I told it was 590. I said it was 590. Come on. Come on. Get out of here. Get out of here. I told you it was 590. Why did you use the January 2025 spot price? I told you it was 590. We're in July. So yes, we have regression. It goes backwards, which would be super annoying. All right, you have the production model, and it's running through the production model. It gets to the end. I'm assuming that these numbers actually do match up. Okay, they do match up. The total ore mined, it's just pulling. All right, you can see the Excel spreadsheet. Okay, copper grade, copper content. I still really dislike this, but that's what it did. All right, 25 million tons. So you get to recovery. This is the copper produced. All right, this seems feasible. Cumulative power, waste mined, total material, copper cost, mining cost. All right. Revenue and costs. It just takes the copper production, runs it through. You get a revenue, and you get the cost. You get the EBITDA. EBITDA starts to go negative at the end, probably because production starts to drop, I guess. Copper price flat. Well, no, that's for the stress case. Then you have the high case. It doesn't do formatting that well, so that's annoying. All right, let's expand that a little bit. All right, $85 billion in the high case. Okay, cash flows. EBITDA, tax, capex, working capital change. How did it calculate the EBITDA? Revenue and costs. Okay, so revenue and costs. Okay, one of the other really annoying things that happens is that Excel has a lot of shortcuts. So in Excel, the shortcut, and I do this on Mac. Not too many financial analysts actually use Mac, but you can just press like Command and then open square bracket or Control open square bracket on Windows, and that will take you to the source of the number. So I should, by doing that, go to revenue and cost F5. I end up in P15. So that is a bug probably. That's probably like a tiny bug for the developers. All right, let's look at cash flow, EBITDA, tax, capex, working capital change, free cash flow. It used a EBITDA minus tax. That is the all right, valuation summary. I'm not going to critique the model too much and the agent too much anymore. It got the gist of it. It's still the finer points are still not there. So, right, market cap EV, comparables analysis, metric NPV at 10% hurdle rate. So in the high case, yes, it's a great amount. IRR in the high case, it's like 11.2%. Payback period 9 years. Comparables. Ran a comparables analysis. So implied valuation, total copper resource, valuation multiple 6.4, copper 6.4 pounds, and implied EV 147 to 2 billion. Weighted average valuation, conservative, balanced. Use the weighted average of DCF comparables, whatever. There's only one, all of these things are kind of back of envelope almost because it's not an operating facility. You don't have the planning for the costing. You don't have the planning for the costing. You don't know the depreciation. You don't know the early cash flows. You will have to draw down debt at some point for construction. So you don't know a bunch of things that you need to know in order to really forecast what's going on. So it's okay. Uh, did it use the correct formulas at least? It did NPV, base case, NPV. Um, so when I see these, I need to see that these are not hard coded. I need to see that you did the work and these are not hard coded. And I don't like the fact that he, it hard coded these some of them, and it also mixed up the coloring, formatting, blue or not blue. Um, and let's look at sensitivity analysis. It ran the sensitivity analysis on the wrong things. Well, I guess it's okay, but I didn't start off with a 4.55. Um, and we have the discount rate sensitivity, valued at different discount rates. That's off the base case, I guess. Where did this come from? Again, there's no link. So I strongly dislike all of these hard-coded numbers. I have no idea whether these are correct now. Um, it needs to be rechecked. You have to connect up all of the numbers earlier on, and at this point, it is more work supervising this thing than it saves. So I could probably do this, crank this out in a couple of hours, making sure that everything fits and checking on the data. But instead, we are at this position where we have spent more than an hour on this, and we are only somewhat close to something nice. Uh, the numbers cannot do not really flow together. They are hard to check. The formatting is off, uh, and the formatting is a big deal because when you're trying to absorb thousands of numbers, it's easier if it's formatted in a certain way, and then you can just like consume it like really quickly. And if the formatting is off, it's very annoying. You know, it's very hard to scan like these numbers, right? Because if you see like a minus 2860 here and it's NPV as dollars million, you expect to see like this, uh, and you expect that to be everywhere. You expect it to follow through, um, and it just didn't, right? It just decided not to, and it's really annoying. The formatting is not there. It doesn't take that much. So um, the chart is a tornado diagram. I don't even know what that is. What I need to see is like the revenue and the EBITDA. Okay, sensitivity tornado diagram. Okay, I get the concept, but it seems like it's unnecessary because I'd rather see the table anyway. And there you have it. So we tried shortcut. The name of the app itself is Try Shortcut. Let's go back here. So there you have it. We tried Shortcut AI. It is a agentic Excel using tool. It allows you to tell an agent to create a financial model or a revenue model or accounting or costs or whatever you have it. The agent is okay. I mean, it got like the gist of it and got like the larger pieces correct. So it got the larger blocks correct. It kind of understands what financials are, what an NPV, what R. You don't have to explain those things, but it did not um, perform that great. Uh, it made a bunch of mistakes on numbers, and numbers have to be rechecked. A lot of banks have, financial institutions have very well defined formatting for financial statements, and they want you to use those. It just basically came up with its own format. The format is not that nice. Um, it didn't like identify all the hardcore numbers. It got lost. I felt like the cells were not properly anchored, and it moved around. I told it to use a 590 copper price. It went back to a 450. I don't know why. It changed a lot of numbers though. It did a lot of work. It compressed context 3 times. I would say that this is kind of like a beta. This is kind of a beta. I'm sure the team will do a lot more work on this, and I can see a pathway to them getting there. It's not a few months probably. I can see a pathway. Um, it's one step forward, but it's not, I think, ready for immediate use for most people. Uh, I think, especially if you are less sophisticated with Excel, you might have difficulty finding out where the errors are or identifying the errors quickly. It throws a lot of numbers at you. If you're used to having a lot of numbers thrown at you, then that's okay. If you're not used to it, if you're not used to checking specifically, it will introduce a lot of errors. I think you probably should not use it to figure out your option strategy or some other trading strategy, etc. At this point, but the pathway is there. I think I think if slightly more competence, just a bit more citations, I think are important because you need to prove out all of these things. So I think having a system of better citations, and other people have done it for uh, research and other modalities. Perplexity does really well in citations. So I'm sure, and this is all of this is data inside. Well, I guess it also checked the web for free programming and a few other things. So it does have access to the web. There is a web browser in there that's running. I guess this is like a huge supercomputer somewhere running multiple agents, doing a lot of tool calls, maybe thousands of tool calls. I don't know. It could be. It could very well be that I've done 10 million tokens in the last uh, hour or so. I think we will get there, but not not quite yet. But we will get there. The pathway is clear. I think with if they narrow down to, let's say, we're going to focus on financials, right? Just focus on, as they already had like three statement financials. We're going to focus on nailing the three statement financial, and the agents will always get it correct. Or we're going to focus on valuation models, and the agent will always get it correct. I'm sure they can get there. There's a lot of data out there, and this is susceptible to, I guess, reinforcement learning because you have answers, and things have to work together. So I think they will get there. And I think it's impressive that they have the browser in-browser Excel. I think for me, that is what most firms are going to require in the future because I think legacy software will not allow the agents deeply into their data models to figure out what's going on. And I think the only way is for AI firms to build the actual front ends that touch the consumer directly, like in Excel or Google Sheets or PowerPoint or whatever. I also wonder whether this is better as a unit of a larger productivity system, PowerPoint, etc. I'm not sure because I think there have been Steven Sinofsky, for example, thinks that it'll all melt away in the end because all of those things, Excel, PowerPoint, they existed because the user interface was different. But once you have a singular user interface, you can have Excel in a chat box, you can have the PowerPoint slides, you can have everything there, right? You might not need these separate pieces of software. So I don't know. Maybe that will happen. Um, anyway, this was my first time streaming. So if you guys want to leave any comments, please do. Please subscribe to the channel. This is a YouTube channel now, so please subscribe to the channel. And if there are any other interesting AI softwares that you want someone else to walk through, well, I'm willing to do it. All right, cheers and bye bye.